What is going on there today, guys? Welcome back to another video. Now, if you clicked on this video, I guarantee it's because it's almost that time of the year again. And if you've been investing into the stock market, then I'm pretty sure you barely found out that you actually have to pay taxes on your stocks. Yes, guys, it sucks, but again, in this country, we all know anything isn't free over here. So we all know Uncle Sam's gonna come for his piece no matter what, whether you decide to pay your taxes next year or 5 years from then, or if you don't decide to pay them, Uncle Sam will come back for you. I guarantee you that. So what this video is basically gonna be on is on how to pay taxes on your stocks for beginners. Now, one important major thing that we're gonna point out real quick is that you only have to pay taxes on your stocks when you decide to actually sell your shares. So if you've been holding them in the long term for a couple of years, then you basically haven't been paying no taxes on them. So you're only going to be paying on the profits that you made, not your initial investment, okay? So if you invested, let's say, $100 into one certain stock, well, if you made, I don't know, if it went up to 120 by the end of the year and you decide to sell it next year, then you're only going to be paying on that $20 difference, not on your initial investment, okay, guys? So don't worry about that, because you've already paid tax from that, most likely from your after-tax dollars on your checks or whatever. So that would be really crazy if we had to pay taxes on top of already taking tax money, right? So so as I pointed out, when you sell your shares and you make a profit from it, this is going to be considered your capital gain. Now, one important quick thing about capital gain real quick is it doesn't just apply to stocks. It can also apply to real estate and many different types of assets. But for the sake of this video, we're going to stick to just stocks for right now at the moment, okay? So if you basically earn a positive capital, meaning you made some money, you're going to be paying taxes on that again, okay? And it's essentially going to be your responsibility to keep up with how much profit you've made so that you can set aside a certain amount of money to pay that off by the end of next year, okay? So what's going to determine how much you're going to pay on taxes on your stocks when you decide to actually sell them? Well, let's break down 2 points real quick. If you own the stock for less than a year and you decide to sell it within that year, then it's going to be considered a short-term capital gain. Now, when it comes to short-term capital gains, you're basically going to be taxed on the same rate as your income. So if you make, I don't know, $50,000 a year, whatever your tax rate is for that, that's essentially what you're going to pay for your stocks also. And if you make, I don't know, $100,000, then whatever that rate for that is for you, then that's what you're going to pay on your stocks when you decide to sell them. But only if you held these stocks for less than a year and decided to sell them. So for those of you who are really into day trading, where you continuously day trade stocks every day and you decide to sell them every day or every other day, be sure you fully understand this on taxes, because when tax season comes, it's really going to bite you if you didn't keep up with any of this, okay? Because you're essentially going to be owing more in taxes because you decided to hold them for less than a year. Now, there's nothing really wrong with that as long as you've made plenty of profit throughout the year. So again, it's just really going to depend on you guys on how you decide to do with your investment wise when it comes to stocks, okay? Each person has their own different strategies, so not everybody's going to be in the same category when it comes to paying taxes. Now, if you own the stock for more than a year, then it is going to be considered a long-term capital gain. And you're going to be taxed at a much lower rate depending on your income source again. So depending on your income bracket, I mean, it's going to be even lower for you if you make less income. But even for those of you who do make high income, I mean, your tax rate is still going to be lower compared to if you actually sold that stock for within a year. So for those investors in the long run, it's going to pay off a little bit more if you actually decide to hold the stocks for a couple of years. So for example, for long-term capital tax rates, for those of you who make from $0 to $38,000 and hold your stocks for over a year, you're essentially going to be paying $0 in taxes. It's essentially all full profit for you. You don't have to pay nothing on these, as long as you held that stock for over a year, guys, okay? Now, for those of you who make around $38,000 to $425,000, you're going to be paying up to at least 15% on your taxes. So again, it's not that much compared to your normal income tax rate, okay? And for those of you lucky doers out there who make over $400,000 or a whole lot more, then you're going to be essentially paying around 20%. So if you invested $100 and you made $100, you decided to sell it after, essentially you made a basically $100 profit. Well, you're going to be paying $20 off of that. So that's not too bad. Now, again, when it comes to short-term capital gains, guys, be sure to check your income tax rate on that, okay? Everybody's is going to be different. Now, do keep in mind, even if you didn't sell any shares that year and you just held them anyways, if you did receive any type of dividends or anything like that, or interest, then you will be responsible for paying taxes on those, okay? You just simply can escape those compared to regular stocks if you held them for over a year, okay? So for those of you who love dividends, do keep that in mind. Now, let's say you took quite of a loss this year. Then what you will be claiming is a capital loss. And you can basically claim a capital loss to offset any taxable income for this year, okay? So if you made, I don't know, $38,000 this year, but you managed to lose maybe $2,000, you can try writing that off and it'll help balance it a little down for you. So taking a loss in the stock market isn't too bad. But that doesn't mean let's just go losing money now, okay guys? Now, one smart strategy you can use with capital losses is that you can use it to help offset any short-term capital gains. So you know how you would be taxed at a higher rate if you sold them within a year? Well, if you lost some money, you can basically offset that to basically help you lower down your short-term capital gains. So again, guys, it's just helping you kind of balance it out a little if you know what you're doing. Now, let's say you forget to report a capital loss or anything. You can actually carry them over to a different year if you want. So if you didn't want to report it for this year, you can definitely try it the next year instead. Just be sure to consult with an accountant to help you determine on how to deal with these capital losses and what's the best way to claim these capital losses, okay? As it can be really confusing, okay guys? Now, like I mentioned earlier, just be sure to set aside some money to be able to pay off these taxes, okay guys? Don't think whenever you make a profit that all that profit's 100% yours at the same time, okay? Some people make this mistake, and when it comes to tax season, they're just like, oh man, I owe this much, and next thing you know, they don't have the money on hand to pay it off. So be sure you set aside some money, okay guys? Now, one really important thing that you must remember right now, guys, and pay attention here because this is extremely important, is that you got to remember this, okay? You also got to consider that if, I don't know, maybe you do a lot of day trading, maybe you made an extra $10,000 this year. Now, let's say you were making $32,000 in your normal job, okay? And you were getting taxed at that rate, which would be pretty low compared to a higher salary rate. Well, if you made $10,000 just off stocks, essentially what's going to really happen is it's going to increase your income bracket, okay? So while you may think you only made $32,000 at your job, but you made $10,000 on the side with stocks, that $10,000 is going to be added onto your taxable income. So now you're going to be taxed at $42,000. So now your tax rate is going to be a little bit much higher if you made a lot of money that year, okay? So please do consider that, okay guys? So again, for you day traders out there, be sure to consider all these things, because again guys, you don't want to be with Uncle Sam owing more than what you thought you didn't owe, and it's just not going to come out really pretty at the end, okay? And really, to wrap it up with this video, just make sure you're keeping up with your sales or buying of stocks, okay? Nowadays, apps like Robinhood sort all the files for you to be able to use that H&R Block or wherever. So it makes it a little bit easier these days compared to back then, where you actually have to keep track of your receipts and save them, and yeah, just a whole lot of different confusion out there. So be sure you know how your brokerage handles these type of things. If not, you're gonna have to do it manually yourself, or just hire a professional to be able to help you with this, okay? And again, if you're not really sure on how much you owe or how to handle any capital gains or losses, just get with an expert, okay guys? Better to hire a professional help you than you messing up your own self in the end. Anyways guys, that's gonna wrap it up for today's video. I really hope you enjoyed it. And if you did, leave me down a comment down below. Let me know what you think. Again guys, it's almost that time of the year. Everybody's favorite year. Well, some people. We only got like 3 months left. So again guys, be sure to keep track of your stuff. Make sure you take these tips considerably. Just make sure you know you are going to be owing taxes again guys. And I just hope you're being smart with it, okay? So again guys, that's going to wrap it up. If you haven't already, hit the subscription button down there below. And I'll see you guys in the next video.